Hi everyone, Billy here from TradeProsper, and welcome to our introductory course on exit orders. Knowing where to exit your position is extremely important, and we will use orders as our safety net when trading. In today's example, we're going to look at three types of orders, but it's important to understand that the orders we're going to look at today will be referred to as exit orders. So in other words, this is how do you close a position that you are already in. The first is a profit take order, a stop loss order, and a one cancels the other order. Let's first look at the orders one would place at the point of buying the shares. Remember, the strategies we are going to look at today would be referencing exit orders. One could put an exit order at one of 2 points. Either when you place the original purchase order for your shares, so in other words, at the same time you place the order in the system to buy the shares, you also put the safety net orders in the system at where you wish to exit. Or alternatively, you can already be long shares, and this will just be the orders you put in the system to protect your existing long position. So let's assume we are buying shares at a price of $75. Now from this point, the market can go up or down. We don't know where it's going to go, so the purpose of putting in stop loss orders and profit take orders is to have the predefined exit levels we spoke about. So let's look on the way up. If we bought the shares at 75, we might feel comfortable selling the shares and taking our profit as soon as the market reaches a level of $79. That'll be a profit of $4 that we wish to lock in. Now, instead of us having to sit and watch the screens the whole day, the current market allows for us to put an order in to say as soon as the market hits our level, close the position and bank the profit. So in this instance, we would put an order in the system to sell our shares at $79. This order is now referencing a profit take order, because think about it. You bought the shares at 75. By selling them at 79, you'll be making a profit. So a profit take order is take my profits out of the system please at 79. Let's look at it on the way down. If you are long shares at 75, you might be concerned of the fact that the market might drop from here. You also wish to exit your position if the market goes below 73. So in this instance, again, instead of watching the market like a hawk, you can just put in a stop loss order to say, I wish to stop my loss as soon as the market goes past 73. In other words, I don't want any more exposure to this trade. Once the market goes to 73, please close my position. The order that you will put into the system now will be at 73, and this will be an order to protect your loss. So in other words, to stop you from losing more, and hence the reason the order is called a stop loss order. So let's just recap. The market can go up or down from here. By us deciding up front where we wish to exit, in other words, take our profit or our loss, we can now, from the get-go, put an order in the system at whichever one comes first. Now, it doesn't have to imply we have to put the orders in separately, because remember, we don't know if the spot rate will go up or down from here. So how do we overcome that? At the same point, you load both orders, and you say, I wish to take my profit when the market goes to 79. In other words, sell out your shares there. Alternatively, if the spot goes the other direction, I wish to stop my loss as soon as we hit 73. And the order we will put in here is called a one cancels the other order, which says whichever order triggers first, do that order and cancel the remaining order. This is also referred to as an OCO order. Very simple. But very important to understand that in both these instances, you will always place a sale order. Because think about it, the underlying position you had was being long shares. So to close the position will be a sale of those shares. So in this case, whether it was the profit take or the loss that closes the position, both those trades will be a sale order of shares. So in summary, when you already have bought shares or at the point of placing the order to buy your initial shares, you can at that point already enter into the system the levels at which you wish to sell your shares. A profit take order is an order to sell your shares at a level where you make a profit. So in other words, higher than where you bought the original shares. The stop loss order is stopping your loss. So in that case, you'll be selling shares at a point lower than where you bought the original shares. Now let's see what these orders would look like if you were selling shares, or alternatively already in a short position, having sold shares up until now. So once again, looking at our same example, you can now see that having sold shares at 75, our risk is now to the upside. So in other words, we have a risk that the market can go up from here, And similarly, our benefit will lie if the market goes lower from here. So once again, let's look at the upside risk first. If I have sold shares at 75, I might be very comfortable in riding the position, but only up until the market trades at 79. Once it gets to that level, I would like to stop my loss from incurring any bigger numbers than at this point. So here again, if I wish to stop my loss when it reaches 79, the order that I'll put in the system at 79, and remember, this is an order that you put now already. You don't have to wait for it to get there. You put the order in the system now so that you can now go back to what you were doing beforehand instead of watching the market screens the whole day. But in this example, the order that you have put in will be called a stop loss order. Because think of it this way, if I've already sold my shares at 75 and I'm buying them back at 79, I will be making a loss. So I wish to stop my loss from being any bigger than this level. Similarly, if we view the market to move in our favor, this will be a movement lower. So having sold shares at $75, we might feel very comfortable closing our position, in other words, buying back the shares, once we hit 73. In this case, we will make a profit when we hit 73, because having sold at 75, buying them at 73 is making a profit. So if you wish to take the profit off the table, you will put an order in the system at 73 to buy shares, and this is referred to as a profit take order. Now once again, knowing that the market can go either direction, we don't know which order will be triggered first. So it's very common to place an order in the system that says, I don't know which level is going to come first, but I wish to take my profit at $73, or alternatively, I wish to stop my loss once we hit $79. And here again, the orders that we will put in the system is a simultaneous order to either buy at 79 or buy at 73, whichever one comes first. So whichever order then is triggered, that order will be executed and the other order will automatically be cancelled out of the system and no longer be valid. This order, once again, is referred to as a one cancels the other, or an OCO order. Important note here, as per the previous example, once we have sold shares, the orders that we will put in the system will be to buy shares, because in this case, the closing trade is a purchase of shares. It doesn't matter if it was a profit take order or a stop loss order. In this instance, when you have sold shares on the original trade, to close them, both trades would be a purchase order. So in summary, when you've sold shares, you would place buy orders, and the buy order would either be a profit take or a stop loss order. A profit take order is buying your shares where you make a profit. So in this instance, selling it at 75, you wish to buy it lower than where you've sold it. A stop loss order, on the other hand, is you trying to prevent the loss from growing any larger. So in other words, when buying your shares, you'll be making a loss at a level higher than where you sold the shares originally. So that was a quick introduction on exit orders. Be sure to also look at our session on entry orders. This is Billy from TradeProsper, and I hope to speak to you soon. Bye-bye.